In today's video, we are diving deep into SoFi stock and its latest movements following the recent earnings report. Hello everyone, welcome to Daily Stock Update. If you are new to the channel, be sure to subscribe to the channel and turn on post notifications by hitting the bell so you never miss any of our uploads, and also enter our giveaway. But before that, alert, this is not a financial advice video. The market witnessed a significant shakeup, largely due to SoFi's strategic decision to slightly pull back on immediate profitability in favor of aggressive expansion throughout 2025. This decision aligns with their long-term vision of capturing greater market share, increasing top-line revenue, and expanding their membership base. By doing so, SoFi positions itself for much larger profitability in the latter part of 2026, where they aim to reach the upper guidance of 80 cents per share. Management seems to be making calculated moves, anticipating at least 1.5 interest rate cuts. However, if 2 or 3 cuts materialize, this will further boost their revenue. Looking ahead, SoFi is projected to achieve over $300 million in profits this year, with the potential to surpass 30% growth. If this trajectory holds for 2 consecutive years, the company could generate $4.4 billion in revenue by 2026. That's a substantial jump, reinforcing how rapidly SoFi is scaling. Their user base has already exceeded 10 million members, showcasing strong momentum. Now let's examine what Wall Street analysts have to say about SoFi's future. Following the earnings release, 10 analysts have updated their price targets, offering a broad spectrum of perspectives from bearish to bullish. However, history suggests that as investors absorb the earnings report, the stock tends to rebound. By the onset of 2025, SoFi is expected to regain its growth momentum similar to what it experienced in 2023, only this time with sustained profitability. The company is operating with 30% EBITDA margins, a 9% net income margin, and continued top-line growth. Projections indicate that SoFi could add over 3 million new members in 2025 alone. For investors, the key takeaway is to stay focused on fundamentals. SoFi continues to expand its market share and outperform competitors in its sector. With these developments, the stock could be on track to surpass a $45 price target. CEO Anthony Noto also stands to receive a $300 million bonus if certain milestones are met. Interestingly, the stock saw a positive reaction the day after earnings, finishing green despite early volatility. This suggests that the initial panic is settling and confidence is returning among investors. Even with a brief post-earnings dip, Wall Street analysts recognize the bigger picture. Notably, KBW's Tim Switzer maintained an $8 price target with a sell rating, despite SoFi securing a $5 billion loan platform deal with Blue Owl. This stance appears to be driven more by bias than fundamentals. Likewise, Morgan Stanley's Jeffrey Adelson reiterated his sell rating. However, given his status as a low-ranked analyst, his opinion holds little weight among seasoned investors. On the more neutral side, Barclays maintained a hold rating with a $16 price target, while Vincent from BTEG also kept a hold at $16. These analysts appear to be waiting for further execution on SoFi's 2025 guidance, which forecasts growth between 23 to 26%. Historically, SoFi's management has consistently exceeded guidance, suggesting that these price targets could soon be revised upward. If SoFi achieves over 30% growth, revised targets could easily reach $25 or more by year-end. Among the more bullish analysts, Citibank's Peter C. maintained a buy rating at $18, aligning with the current trading range. Similarly, Jefferies' John Hank issued a $19 price target before earnings and has reaffirmed it post-report. He is a 5-star analyst ranked within the top 300 out of 9,000, adding credibility to his forecast. However, the standout analyst this time is Kyle Peterson from Needham, who upgraded his price target from $13 to $20, signaling a major shift in sentiment. These ratings illustrate a wide divergence among analysts. Some maintain targets as low as $6 to $8, while others set expectations between $14 to $16. Meanwhile, bullish analysts push for $19 to $26, reflecting optimism about SoFi's future performance. Looking specifically at membership growth, SoFi projected 2.8 million new members for 2025, which aligns with their 2024 growth of 2.3 million. However, given past trends, SoFi tends to exceed its forecasts. If this pattern continues, we could see member growth reaching 3.5 million, bringing the total user base to approximately 13.5 million by 2026. Examining historical trends, some analysts who previously issued conservative targets have now turned bullish. For instance, Ashwin S., a high-ranking analyst, maintains an $18 target, aligning with Citi's Peter C. Meanwhile, Jefferies and Needham analysts place their expectations at $19 and $20 respectively. Andrew Jeffrey stands out with a $26 target, ranking 27th out of 9,000 Wall Street analysts. These revisions suggest that market sentiment is shifting towards recognizing SoFi's potential. A key takeaway from the earnings call is that SoFi is laser-focused on long-term expansion, even at the cost of short-term profits. The company reported 2024 EPS at 15 cents, exceeding Wall Street expectations, while the 2025 EPS forecast of 27 cents caused a short-lived sell-off despite signaling strong future growth. This is a company on track to achieve nearly 500% EPS growth within 3 years, from 15 cents in 2024 to 80 cents in 2026. Looking at financial data, SoFi is now entering a second phase of rapid growth. Unlike 2023, when the company prioritized expansion at the expense of profitability, this time they are growing while maintaining a strong financial position. Membership has surpassed 10 million, and cross-selling opportunities are driving revenue growth. 2024 revenue is expected to hit $2.6 billion with 26% growth. For 2025, growth projections exceed 30%, pushing revenue past $3.4 billion. If this trend continues, 2026 could see revenue climb to $4.4 billion, with potential profits approaching $900 million. This trajectory places SoFi in an ideal position for sustained long-term success. Breaking down the lending segment, we see record-setting numbers. In Q4 2024 alone, SoFi originated $1.3 billion in student loans, $5.2 billion in personal loans, and $577 million in home loans. These figures mark the highest levels in 3 years, reinforcing SoFi's strength in this sector. Despite a short-term sell-off due to conservative EPS guidance, these numbers indicate strong business fundamentals. Additionally, SoFi's financial services segment reached $256 million in revenue with $114 million in contribution profit, marking new records. One of the most exciting long-term prospects is the growth of SoFi's financial services division. By 2026, this segment could surpass lending and revenue contribution, further diversifying the company's risk profile. This shift will likely command a higher valuation multiple, positioning SoFi as a dominant player in the fintech space. In summary, SoFi is making strategic moves to ensure long-term dominance in the financial sector. Short-term volatility may occur, but the overall trend remains highly positive. Analysts are increasingly bullish, price targets are trending upward, and growth metrics indicate a bright future. Investors who understand the fundamentals recognize that SoFi is on a trajectory to become a major industry leader by 2026. Friends, that's all we have for you today. What is your opinion about today's video? Get involved and let us know in the comments down below. Thanks for watching.